All right, everybody, welcome. Doug McKay on the 2nd of March, 2012. Let's do something a little different tonight. Since the overall trend in equities has been up for 11 weeks in a row, let's start out with gold instead of the S&P. Maybe we'll finish tonight with the S&P 500. But huge move down in gold on Wednesday. A lot of technical damage. I was very close to getting long here in the managed accounts. We had the original buy signal above this downward sloping trend line, and then when we cleared resistance here pretty convincingly above 170, that was an area to get long, thinking that we might be testing kind of that 190 area. Didn't happen. We didn't get long. A nice pullback to hold at 170 and then up through 174 would have got us long. But in any event, that worked out well. We did have heavy selling on heavy volume. Again, I see this as a lot of technical damage. We would sit up on our seat on a long position if we were able to get above these highs. And those highs that were put in on the 2nd of February was around that 171. So let's just say if we get above 170, we'll sit up on our seat above 172. We would potentially think about getting long with a stop under the lows that were put in on Wednesday of 164. But as it looks right now, the way it looks right now, I think this is going to be really a short. So I think there'll be more damage done yet. I think we'll test these lows, if not break them, that were put in Wednesday. So if you're in gold, if you're long right now, I would have my stop on a close just under the lows that were put in on Wednesday. And for the long side, I'd wait till we at least got above 170, 172. If you wanted to be more cautious, I would wait till we got above this 174 level. Let's look at the flip side of that, which would be DZZ, which is short gold, double short gold. Again, if you were to play this, I would have my stop under the low that was put in on Wednesday. This is the inverse double short gold. Let's flip over to the Russell. The weakest out of the four, NAS, S&P, Dow. Russell's been rolling over. There is support right around 79.90. Got the 50-day probably at around 78.50. But as it stands right now, this looks like a short. You could play the short end of it using the TZA. And I would again have my stop under the low that was put in on Wednesday. But the Russell is rolling over on higher volume. Our chart of the day is Ford for a couple of reasons. We'll mention this tomorrow on the radio. We did get above this downward sloping trend line. Originally, this showed up as a pennant formation. Let's see if we can draw in a trend line here underneath. So this was a nice bullish chart here. But then it started to break down. It didn't break below this area of support, but it did break the lower end of this trend line here, breaking out of the pennant. It has since recovered. I would have my stop under the low that was put in under this candle, which was Monday on 227. That low was 11.99, so let's just call it 12 bucks. I'd be no farther back than that. I'd be concerned if it broke this area here, which is probably right around 12.12. But the reason I wanted to bring this chart up, because even if you're shaken out of something like this and it begins to recover and it looks highly probable that it's going to break out, you have to have a short memory and you get back in. In this case, I'd want to see a close at a minimum above the highs that were put in on 217. That high was 1288. Or you could wait for a close above the highs that were put in today, Friday on the 2nd. And those highs were 1294. So you could round it up to 13. We get above 13, you get long, have your stop around 1212. The farthest you'd be back is $12. But again, for educational purposes here as well, even though you might get stopped out because it broke this pennant, you can always get back in. Let's take a look at OIL. We do have a position in this in the managed accounts that we put in yesterday. Potentially there's a lot more room to run if you open this up to a monthly chart. But looking at a daily chart, we did get long this yesterday. Again, looking at a potential pennant pattern. We were long probably at around 27.44. And when the news came out of the Middle East, this had a huge run, and then obviously it came back down yesterday to finish off the highs for the day. Oil tanked today, down more than $2. This trend line I drew in yesterday, it held that. It bounced off it on a low today. But we did hedge this today. We did hedge this long oil position today with DUG. The reason we did that is twofold. Number one, we do have this downside gap, but more importantly, this could be a false breakout here where there were shorts that were stopped up here that were taken out intraday yesterday. So we'll see. If it does break above this pennant, out of this pennant, above this downward sloping trend line, we will let the DUG go and we will stick with the OIL long. On the flip side of that, because actually both of these charts look fairly bullish. On the flip side of that, if oil breaks down, we're going to let the DUG run. So we'll keep you up to speed on that next week on a still chart. Let's take a look at a couple bonds here. Let's take a look at Junk J&K high yield. Good looking chart, still holding the trend line off today. We'd want to see 39.30 hold. 39.30 hold. We do not have a position in this, but we do like the chart. We may get into this because of the yield and also the overall trend, possibly next week, maybe the week after. So we're keeping an eye on this. The internals are kind of weak, as you guys probably know. Transports, IYT, continues to roll over, very similar to the Russell. So again, we're keeping an eye on that. And let's take a look at UDN. We were long this. This is short the buck. We were long this earlier in the week in the managed accounts. We exited this for probably, I'm guessing, maybe a 1% loss. We got out on this day here, and then it started to recover. And then Bernanke came out Wednesday and just basically hit this. So my point in this is, you know what? At this stage, in these markets that are so news driven, whether it's gold, whether it's oil, whether it's equities, whether it's a dollar, we are not going to keep a long leash on any of this. We're gonna cut it short and quick, even if we have to get back in at a higher price than where we exited. But anyway, the buck caught a bid, therefore UDN rolled over and we got out of this. And so far it looks like a good move that we did get out, even though we took a small loss. Let's take a look at treasuries. Like we do each week, still in that range, especially the shorter end on the 10 versus the 30. Various gaps that keep getting filled. Again, we're going to keep an eye on this. We'd want to see it close out of this congestion area of 106. All right, so we've covered that. Let's finish off with the S&P 500, which is where we normally start. We'll give you some levels of support short term. Closed at 1369 today. Not a bad day, great week. We're still holding the trend line, even a short-term trend line. We will sit up on our seat if we break 1350, pretty much our line in the sand to increase a hedge or get rid of some of the S&P would be around 1340. But we'll definitely sit up on our seat if we break this first area of support in the underbelly of this trend line. All right, you guys, that's it. For the 11th week in a row on the blog, on the radio show, we have the overall trend in equity markets as long. Gold we see right now as a short, and bonds are kind of mixed, and the dollar's catching a bid, so we are out of the short buck. We'll see you guys next week on the blog. Thanks.